What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. It's the holiday season, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we had a light week, but one filled with some critical news and very critical technical setups almost across the board here. You want to stick around and take a look at those because that'll give us clues as we march into 2024. Better not waste any more time. Kick things off like we always do with Meta Platforms. Start of the week at 340. This one up solidly. We'll see that with Google as well. All the online ad names higher, up 3.7%. Meta Platforms finished the week at 353.39. Beautiful technical pattern forming for Meta as well. TikTok owner ByteDance is seeing sales cross $110 billion. It's surpassing Tencent in terms of total net sales. This also likely fueling some of the demand that we've seen for shares of Meta, of Snapchat, of Pinterest, obviously Google, as well as you have online advertising absolutely humming these days, pulling out of traditional media. We'll have a story when we get to Netflix. Consolidation in the media industry because you're having advertising dollars pull from there and then flow into these digital channels. Probably going to be a pretty darn good year for online ads heading into next year. The FTC, Lena Khan, looking to crack down on social media apps going after kids. Which social media app is not going after kids these days? She doesn't have the ability to write any formal laws, but certainly could influence some of the decisions that we could potentially see. I don't think we're going to see a lot done legislatively next year, it being an election year, neither side wanting to bargain or give any other side a win. But as you move into the October-November timeframe, we could have a clearer picture of the legislation that is coming forth in 2025. Some of you might say, well, that's a long ways away. And that is true. It is a long ways away, long election cycles. But if there's candidates with the willpower to ban a TikTok, to rein in the types of targeting and advertising that already can be done on kids, well, certainly would impact sometimes positively, sometimes negatively, these online ad stocks. I'm moving on to Apple. Start of the week at 195.26. This one just sliding sideways to finish the week at 193.59. Big news out of Apple this week as it literally halted sales of its Apple Watch. Now, this is just, I believe, in-store and certainly online as well. You can still go to maybe like a Best Buy where there's existing inventory, things like that. Target, Best Buy, any electronic shop that has an Apple distributor agreement. Well, they're still selling these watches, but it all hinges on this dispute, this patent lawsuit that the company lost in court to a company called Massimo. Now, it definitely looks like to me Apple is in the wrong here. They met with this company about 15 years ago or maybe about 10 years ago, and it looked like they were going to work out some kind of licensing agreement. Maybe the two companies were going to work together. And then Apple just started poaching employees, paying them way more. In my opinion, Apple did some kind of shady tactics here. It's not something that the company hasn't been known to do in the past. However, the company could get a reprieve by President Joe Biden. He has until Sunday. He essentially has veto power over this, where he could veto this. I hope, and I'm not in the business of telling presidents what to do and what they can't do, but I hope he doesn't do this. The court has ruled. Apple certainly seems like they're at fault here. Apple should go to the bargaining table with Massimo, which again is a public company, but it's not a big one. Okay, you got about a $6 billion market cap on this company. Apple could drop that out of their pocket and buy this company for a 50% premium, and nobody would really notice that much. They should be able to go to the table with this. But what this also shows you is as Apple continues to develop this Apple Watch, as they get more into healthcare, maybe even that Vision Pro has some of this type of stuff as well, they're going to hit the wall from a patent perspective. There's going to be other companies with IP that is more valuable and more kind of locked down from an IP and a patent perspective. So Apple's certainly going to have some challenges as it moves forward. We'll see what happens here. Again, I hope the president doesn't veto this, but again, he is somebody that has Apple in their back pocket. Apple donates the majority of their political donations to President Joe Biden and the party he's affiliated with. And so we'll see if he plays partisan politics or if he lets the courts decide what's happening here. We'll certainly keep a close eye on that. Moving on to Amazon, start of the week at 152.03. This one up just fractionally, up about 1% to finish the week at 153. 42. Amazon is said to be in talks to invest in Diamond Sports Groups. Now, Diamond Sports Group is kind of a local television with a number of Major League Baseball rights. It looks like maybe about 12 MLB teams, along with 15 NBA teams. This, to me, is telling you that Amazon is pushing more and more. They tested some of these sports, probably from a financial perspective. They've tested that Thursday night game. They're paying, I think, like hundreds of millions of dollars each game in order to air that game, and they are probably seeing positive results because Amazon, we have another story here where Amazon is running from a leaner cost structure. We've seen them close down grocery stores, Amazon Go stores. We've seen them let go employees, but what they're doubling down on, this is what's showing you what's working in the marketplace. Amazon is doubling down on live sports, so they're obviously seeing data that says that business is a good one. Also, what they are doubling down on is investing $17.9 billion in the great country of Canada to create over 9,000 jobs over the next 10 years, call it, building out AWS infrastructure. And again, we'll get Amazon earnings along with all of these companies. We're about a month away on some of these companies, maybe a month and a half on a few of them, but we'll certainly keep a close eye. Amazon certainly making some difficult decisions from a cost perspective, and in my opinion, doing a pretty good job leaning down the business, flowing out more operating profits. The company's not really valued on a growth perspective. It's more on those profits, and this all-important PE ratio could get whittled down next year as this company looks to squeeze more and more profits out of their revenue generating businesses. Moving on to Netflix, start of the week at 483.82. This one, like Apple, just sliding sideways to finish the week at 486.76. Paramount and Warner Brothers potentially combining as you are starting to see consolidation in the traditional media business. Disney Plus doesn't make money. Hulu doesn't make money. Warner Brothers Discovery doesn't make money. Paramount, all these companies having trouble making money. Even Apple is looking to partner with some of these companies in order to consolidate the business, get all the ads flowing into maybe kind of one network, getting all the subscribers onto one platform. And we'll see where things go with the media. I think you're going to have a big year in media next year. Disney could get broken up. You know, they might sell off ESPN. They might lean out their businesses. You might have combinations as well. Should be exciting, in my opinion, as these stocks have been absolutely beaten down. Be interesting to see if some consolidation and then maybe kind of a rebirth of that industry, if you will. Now, Netflix subscribers, one company that is doing great in the media business is Netflix, and Wedbush sees their revenue numbers trending higher as this company is almost exactly 1 month away from earnings as we move into next year in January. Should be an exciting month. Now, Broadcom. Yes, Broadcom won a patent infringement case against Netflix. Broadcom is a semiconductor manufacturer, and they have networking business. It's a great company, honestly. They've been making some software acquisitions more recently as well. This patent covers features which is often used in video coding, maybe changing the resolution in order to stream Ultra HD content. Broadcom winning a case where you get a fine if you're Netflix, or an alternative to that, the board of directors could spend 15 days in jail. I love these German laws there. So you can either go to jail if you're Netflix, or you can pay the fine. My guess is they'll continue to appeal and end up paying a fine to Broadcom. Moving on to NVIDIA, start of the week at 492.83. This one slipped down just a little bit. We'll see it from a technical perspective. Made a lot of sense. Down about 1% to finish the week at 488.30. Now, some research out there sees some mixed data points as it relates to AI and GPU demand. Now, I don't think we have any problems forecasting GPU demand. Should be really good as you head into at least the first half of 2024. My guess is all the way to the back half of 2024. The mystery to me with NVIDIA is, can they hold those like 70+% margins on like a $20,000 product? That is so hard to do. You've got AMD knocking at the door a little bit. There's some private companies like Cerebras, a few others. You also have Intel playing in this game as well. You also have the progression of large language models, how they're trained, how they're run. Maybe there's other ways to do these other than running them on these $40,000 GPUs that NVIDIA is making, again, 70% margins on. My guess is as we move through the year, you'll see margin compression over at NVIDIA, but this company company is nimble enough that they'll likely be able to supplant that margin with maybe some other areas of their business, like their cloud unit. Now, Taiwan Semiconductor's chairman to retire, and the CEO is to take up that role of chairman on the board. Now, this company is TSM relies heavily on knowledge. It's very much a knowledge-based business. Obviously, they have a lot of infrastructure, a lot of manufacturing capability as well. That certainly gives them a large moat around their business. But you got a lot of knowledge over at TSM. And a leadership thing is something that you need to pay attention to. But the moat is so wide around TSM that I wouldn't be too concerned about that. Now, moving on to Google, the stock of the week up 6% as it started the week at 133, finished at 141.49. You want to stick around to the chart on this one. This is where Alphabet or Google really shot up earlier in this week. You actually had kind of a parabolic move as the company said they're going to pull an Amazon, pull a Meta, and restructure its ad sales unit, as they are finding the company is increasingly relying on machine learning to let customers buy ads on its search engine like YouTube and obviously Google.com. So this is a 30,000 person unit. And so you see any meaningful reduction in staff there. And yes, that is something absolutely that would flow down to Google's bottom line. I tell you what, the ad business is back. It was struggling for this anecdotally for me in terms of purchasing, getting the volume, certainly the revenue that you were getting. I know it's a fourth quarter. You tend to see a little bit of a push there, but man, online advertising seems really, really strong right now. Google, Meta, Snapchat, Pinterest, all the public companies, I think are going to print very, very strong quarters. Now, keep in mind, a lot of it's getting priced in already. Now, we're also seeing a lot of changes to the Play Store. This will probably be a story for Apple as we move into next year, as Google is ordered to pay a $700 million Play Store lawsuit. This was an antitrust lawsuit brought by 36 great U.S. states. Part of the settlement also means that app developers can implement an alternative billing option besides that of Google Play, which again takes, I think, between a 15% and 30% tax on every dollar that flows through there. So now moving on to Microsoft, start of the week at $369 and some change, up 1.26%. Finished the week very close to $375 per share. Microsoft and OpenAI see other authors join a copyright lawsuit over the AI models training. It certainly appears that these AI models were trained on AI data. It does appear to be some internal documents pointing to that as well. I don't think also that is correct. Look, I'm big on like deregulation, the government staying out of things, but the law is the law. And I actually think copyrighted material, if you're going to train AI models on it, you should be compensated like other forms of media. Moving on to Tesla, start of the week at 256 and some change. This one down 1.5 points. Finished the week at 252.54. Tesla is going to give a 10% raise to some of its hourly staff, to all of its hourly staff in Sparks, Nevada Gigafactory, where they make a lot of the battery technologies. You're going to get $22 per hour and maybe up to $34 per hour, which in the state of Nevada, not too bad considering their tax structure is a hell of a lot better than it is out here in California. The UAW, which is United Auto Workers, trying to form some kind of union over at Tesla, unsuccessful and able to do that, but they are likely putting pressure on Tesla to make some changes there. Now, Tesla supplier Panasonic is canceling a plan to build an EV battery pack plant in Oklahoma, which is just north of Texas, which is the home, obviously the headquarters now of Tesla. This is just showing you just have weak EV demand. Now, it doesn't necessarily mean Tesla's EV demand is weak. I think you're kind of seeing it across the board. You had relatively affluent people that live out here in California, people that don't want to pay the $7 gas. Well, we've all bought an EV already, okay? And so now you kind of need that incremental buyer. And just from all the stats I see, and people always ask me like, oh, how do you like your Tesla, this, that, and the other? I let people borrow my Tesla. I let them drive it. I tell them how great it is. I really like it. Range is overrated. All those other things that people tend to be concerned about, way overrated, way over talked about. But these people constantly go out and buy an overpriced gas car. In my opinion, you're getting a great tax write-off as it relates to Tesla, and you can get into a Model 3 for like less than $30,000. That's a great value, in my opinion, as it relates to automobiles. But a large part of the population just doesn't want to go that route. Now, Tesla's Roundup, a mega pack plant is coming to China. It looks like the company spent about $31 million to acquire land to make these big mega packs that are used sometimes by power companies, but also by individual households or maybe kind of micro communities as well. Certainly a business we have our eye on as it relates to Tesla, since the profit margins there might exceed the electric vehicle, and the demand potentially in the short run might be better. Now, moving over to the technical segment of the show, the S&P 500 has completed a gigantic continuation of an uptrend that has really been intact, I think, technically since October, but more kind of in that beginning of the year, January timeframe. You've basically been in an uptrend. You've completed that uptrend. Now what you're anticipating is in the beginning of the year, actually, to see some kind of pullback on the S&P 500. Potentially not. Sometimes when you come to these all-time highs and you kind of peek over them, you get CNBC running specials. You get people that were locked into 5% treasuries or whatever, and they're getting a little bored. They want to make a little bit more money. They see all the money that has been made. Retail tends to pile in sometimes at these situations. So it wouldn't totally shock me if this rally just continues as you move into January and February next year. But from a technical perspective, what I am expecting is a rejection here, a pullback. You have to buy the pullback. I don't know what kind of investor you are. I don't know what is going through your head. Is if a stock market or a stock, it doesn't really matter, when it's technically in an uptrend for a year and it pulls back, and for some reason you make an excuse here not to buy the dip, I really don't understand it. Like we talked about constantly, you buy the dip on these things, you put your stop under the previous lows, and you hope that the pattern continues. You make a new high. You go from 4,300 back up to 5,000 on the S&P, and you move along your day. Moving on to Meta. This one looking absolutely fantastic. Just confirmed like a fourth higher high. This one looks like it wants a destiny to all-time highs. My guess is Meta reports their earnings almost a month from now on January 31st or thereabouts. This one is going to want to set up at the highs that you made back here in August of 2021. This stock's going to want to set up here right before earnings, and then you're going to get decision day on earnings, whether it powers up to a new valuation or it gets rejected at that level. You get rejected at that level, you're buying it. Now, also moving on to Apple, also confirming a new higher high, although it's not as big as Meta's. You did just confirm a new higher high. You are technically buying the dip. There's an area down here at 180 with Apple that looks pretty darn good. Amazon, slightly different scenario. You're pushing up into a large area of consolidation. You should have some profit taking from Amazon as people bought these shares in 2020, 2021. They kind of lost money on paper. We'll put that in air quotes. Now you're back to even. So it should be kind of difficult for Amazon to push its way, but you are in technically just a beautiful uptrend here. Higher highs, higher lows, pullbacks in Amazon can be purchased. Also looking with Netflix. This one, its uptrend has shallowed out a little bit. You are looking to get rejected here with Netflix. Netflix, always the first of the major FAANG stocks to report. It will report a month from now on January 23rd. Pullbacks in Netflix certainly can be bought down here at about 380. Moving on to NVIDIA, making higher highs, but nothing convincingly. The stock gets rejected routinely here at 500. You get pullbacks in NVIDIA down here at 399, 400. That should be bought. You could also, wouldn't surprise me though, if you do like a Meta-like move, where you're peaking your way up here at the top, and then you kind of, again, like Meta, you were consolidating kind of sideways, and then you made the decisive break upwards. Wouldn't surprise me with NVIDIA. You do that, I wouldn't be a buyer of it. Again, you're buying the pullbacks in that one. Moving on to Google, looking absolutely fantastic. pretty much confirmed a new higher high. This one could get rejected here. You're looking to buy this one south of 128. Microsoft, in one of the steepest uptrends that we've seen, it's consolidating very tightly between about 365 and 380 here. You're looking for a decisive breakdown, not concerning because you're really probably just flattening out an uptrend at that point. A break higher, and who knows where that one can go. Tesla, love to see this stock break out early next year. The trend since the beginning of the year has been higher. Really, though, since over the last 2 years, the stock has more or less been sideways. You're looking for a decisive break higher. You break higher on Tesla, particularly above 300. You get above 300, you've got a very good chance of probably coming up here to 400. That's an area where you take profits. Then you look for these rebounds. Stop losses on Tesla, since it's pretty volatile, probably be here at 194, maybe even more conservatively down here at about 150. Folks, that was FAANG Stock Recap Show for Friday, December 22nd. I hope you all have a wonderful weekend. Obviously, a wonderful holiday, a wonderful Christmas for those of you that celebrate. Enjoy the time with your family. Enjoy the time off. We will see you again next week. And until then, good luck with your investments.